Hey everybody, welcome back to the STR Investing Podcast. I am your co-host Mark Lumpkin, and you're here for another Monday morning market data report. I am actually recording this on Sunday night. I've been in Tampa traveling all week. We've been touring properties, been to about 30 different short-term rentals in the last 5 or 6 days. We've seen everything from properties that have been live for a few years all the way to properties that are under construction and homes that people are considering buying to make a short-term rental. It's super informative. There's a lot of things that you can learn from being on site, and so I don't regret it, but I am playing a little catch up. So if you're watching this live and you're wondering why it's so dark in my office, it's because it's like 10:30 at night and I've been traveling for the last 7 or 8 days. So let's get after it, guys. This week, we have none other than Bend, Oregon, my old Amarada. I went to high school in Bend, Oregon. I'm a Mountain View Cougar, played football and basketball for them. I love Eastern Oregon. It's a beautiful part of the world. And I actually just spent my last summer of 2025, La Pine, Oregon, just not too far from Bend. So if you're familiar with the market, you know that it's a great place to vacation, really a cool place to live. And let's find out what it takes to make a profitable short-term rental out there and what does the data tell us. And so diving right in, 3 bedrooms in Bend, Oregon, in the 50th percentile, earn an average of $41,000 a year. In the 75th percentile, they earn $55,000 a year. And in the 90th percentile, they can earn up to $70,000 a year. So almost a $30,000 bump from the 50th percentile all the way up to the top 90th percentile, which average daily rates ranging from $233 up to $329. So about a $100 bump in the average daily rate. And then occupancy going from 41 to 61%. So we see a huge jump in revenue from the 50th percentile to the 90th. Most of that's coming in your occupancy difference. You're going from 40 to almost 70. That's a big deal. When you jump into the 4 bedrooms, in the 50th percentile, we see a $5,000 bump up to 46 grand. In the 75th percentile, we see about a 12 grand bump up to 68,000. And in the 90th percentile, we see a $16,000 bump up to 86,000. So if you're in that 50th percentile, it's not really a huge deal to get that 4th bedroom. Certainly not for what it would cost you to get a 4th bedroom in Bend, Oregon. Real estate's expensive out there. So that's not a huge bump, but if you're in that top 10%, it's a pretty substantial bump. 16 grand a year is pretty big. Average daily rate goes from $319 all the way up to $475, with occupancy staying similar. It actually dips a little bit in the 50th percentile, down to 35 from 41 in 3 bedrooms. And then in the 90th percentile, it goes to about 60% from 70. So you do see a bit of a drop in occupancy when you go to 4 bedroom, but you see the average daily rate goes up by a couple $100 a night, especially even in that 90th percentile. So you're going to definitely get a revenue bump. What's interesting about Bend is it really seems like the biggest bump so far is just in having a top performing property. It's not even so much the bedroom count. It's more in just how well your property scores compared to everyone else, because those top 90th percentile ones are doing really well and the 50th percentile ones are not. When we go to that 5th bedroom, we see the 50th percentile properties jump from 46,000 to 70,000. So that's a huge jump from 4 bedroom to 5 bedroom. We see the 75th percentile jump from 68,000 in 4 bedrooms all the way up to 94,000 in 5 bedrooms in the 75th percentile. And then in the 90th percentile, those 4 bedrooms were 86 grand, and in the 5 bedrooms, they are 110,000. So there's a huge jump. Going from 3 to 4, not a huge jump. Going from 4 to 5, substantial. It's $20,000, $30,000 a year in revenue. Average daily rates for 5 bedrooms in the 50th percentile is $456. In the 90th percentile, it's $650. So it's about a $200 a night bump. And then on the occupancy, it's pretty similar, anywhere from 38 up to 58%. So basically 40% for the lower performing properties, 60% for the higher performing properties. That's pretty standard all the way through here. We don't really see occupancy change very much. And then in the 6 bedrooms, the big ones, the big fat daddy houses. Let's see what we got here. The 50th percentile houses are earning $102,000 a year. So that's a $30,000 bump over 5 bedrooms. And it's a $52,000 bump over 4 bedrooms. So that fifth and sixth bedroom can be really valuable. 75th percentile in the 6 bedrooms is 112, and those top performing homes in the 6+ bedrooms are pulling in 162,000 plus. There's probably some pretty profitable $200,000 a year properties there in those 6, 7, 8 bedrooms. Average daily rate in the 50th percentile for 6 bedrooms is $600, all the way up to $1,158 in the 90th percentile. So there's a huge bump when you go to a 5, an even bigger bump when you go to a 6. All of these revenue differences mostly come in the form of additional nightly rate, as occupancy really stays consistent all the way through. Even in the 6+ bedrooms, our occupancy starts at 38 and goes to 55. So we don't really see a big bump in occupancy from 3 to 4 to 5 to 6, but we see a big bump in revenue at the 5 and 6 bedroom markers. And we see that through the average daily rate. So there you go, guys. Our data is provided to us by Summer OS. Sorry this one's coming to you late at night, but I wanted to have this out. A lot of people have been giving us shout outs that they really like these short Monday episodes, so we wanted to keep them coming to you, keep them fresh. Bend is a great market. I love Bend. I love visiting. If you haven't been, you should definitely check it out. And then the data is super interesting. I think the theme here is obviously, like a lot of markets, the bigger houses tend to do better, but even more so, the difference between falling in the middle of the pack in the 50th percentile and being in that top 10% really is where your revenue difference comes in. So set up great properties and entice your guests and take as much of that market share as you can. If you need help, reach out to me. I'm always happy to give free advice, and we'll catch you guys this Friday. We've got some more great guests coming your way. Thanks again.